we're keeping at it, and we almost don't care what happens to the economy.
Hey guys, welcome back to Library of Wealth. Today we have Cathie Wood on what's headed for the market right now. Wood now believes the Fed rates will decrease, but says it appears as though they stopped caring about the economy. It's currently showing signs of extreme weakness, along with the household employment charts being down for the last 4 months. Wood has never seen a swifter increase of the bottom. Many people haven't realized we've gone up about 50% from the previous lows. There have also been many layoffs from companies everywhere. Wood believes that this is all associated with the giant inventory glut currently taking place as well. Let's listen to this interview with Cathie Wood as she gives her take on the future of the financial market and where we're headed next. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
In my career, during most difficult times in the market, recession times, I know there's a big debate as to whether we're in one or not. And I know there are perhaps political dynamics at work suggesting that no one wants a recession in a midterm election year. But we believe we're in a recession, and I think the evidence is accumulating that the statistics that we're getting fed day to day and to which the market reacts so violently may be very distorted by seasonal factors. And I'll get into that in a moment. But if we're right, then the downturn during the first half of the year, 2 quarters of negative real GDP growth, that downturn might be worse than has been reported. It is true, the last year, against our expectations, has been a very difficult one when it comes to inflation. I never dreamed, given all the new technologies in place to take care of these things, that the supply chain issues that started in April of 2020 would extend for more than 2 years. It's still pretty shocking to me. We do believe those are loosening up now. We're getting all kinds of reports that that is the case. And we also did not predict, no one did, the Russian invasion of Ukraine, which has sent food and energy prices soaring, which is a really cruel tax on the consumers around the world. So I've also not been in a period where fiscal and monetary policy during a recession have actually tightened up. Typically, fiscal and monetary policy are contracyclical. In other words, when the chips are down, the economy is in recession, usually fiscal stimulus and monetary stimulus follow pretty quickly. And instead, what we're getting now is the opposite: fiscal policy tightening, including the Inflation Reduction Act, and monetary policy tightening, and tightening aggressively. So fiscal policy. We got the Inflation Reduction Act, and as I think many studies have corroborated, the initial University of Pennsylvania analysis was that it would not reduce inflation per se. And yet we probably will see lower inflation. So, I think that the administration will take the credit for that. And frankly, all I care about is that inflation unwinds.
Wood believes that there is a lot of evidence that the real problem in our economy is actually deflation. The CPI and PPI are both lagging indicators, which means the Fed is always driving policy away from them. Wood says the real inflation index is gold. Since its peak in August 2020, we've been in the low end of the trading range. Wood believes if the Fed continues constricting, the dollar will begin to increase and commodities will keep falling.
But to understand the pro-cyclical nature of this policy, taxes will go up, now this is over a 10-year period, by $737 billion, and spending will go up by $437 billion, thereby reducing the deficit. Now, if that were correct, and I don't think it will be, these numbers are never really correct, but if that were correct, the deficit would be shrinking. And we do know that federal outlays still are down 15% year over year. So that gets into our GDP accounts, and government accounts for 20% of our GDP. So down 15% in 20% of the economy, that is fiscal drag, and is contributing to the recession we believe we're in. On monetary policy, so Chairman Powell gave his annual presentation at Jackson Hole, or gave the Fed's annual presentation. And we read line by line what he said, and it was very interesting. He invoked the name of Volcker, former Federal Reserve Chairman Volcker, who really combated the inflation of the late 70s and early 80s. He invoked his name twice, but he also hinted by using the phrase "keep at it" or "keeping at it" twice. So that was really a reference to the late 70s, early 80s. And I really do believe that the Fed believes that we have a problem that might be that significant. If they didn't believe it, they wouldn't be acting this quickly. And I think they're awfully afraid of ruining their own legacies. They do not want to be known as the Federal Reserve members who presided over another big wave of inflation. But I really believe that change has been a tremendous shock to our system, and certainly to housing. We're seeing statistics, and I'll go into them in a moment, all over the place, that housing is in a recession. And I do believe we're seeing evidence that prices are going to follow. So we're concerned that the Fed's overdoing it, and that in invoking Volcker's name twice, outright, and then indirectly twice, that Chairman Powell was basically going to say, we're keeping at it, and we almost don't care what happens to the economy. And in the statement, it was very interesting. There was no focus on real economic activity. The only focus was on inflation. So that was a clear message. We don't care. We just want 2% inflation.
Wood believes that we are currently moving into a serious recession. The only difference is we don't have access to the systematic excesses like in the pre-08-09 mortgage market. Wood states that the ongoing decline is partly due to China beginning to unwind from this cyclical point of view. She says that the Fed doesn't care what happens to the economy now, and they're overly focused on inflation. If Wood's interpretation of deflation as cyclical is correct, the coming deflation will actually be a good environment for the financial market's growth. What do you guys think about Cathie Wood's opinion on deflation being good for the economy and how the Fed is handling inflation indicators? Let us know in the comments below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.